Hello friends, on behalf of Study Festivity, I am Dr. Professor Kr.Chakrabarti again with you in class number 402 of accounts with the topic treatment of goodwill in case of retirement of a partner. So friends, yesterday I took up the treatment of goodwill at the time of admission of a partner. What we have seen? We have seen that when a partner comes in, he is expected to give the premium for goodwill. The premium, if he pays the premium will be distributed among the sacrificing partner in their sacrificing ratio. Now, if he does not pay, तो मैं क्या करूँगे? हम लोग क्या करूँगा? हम लोग उन लोगों को एक्सक्यूज़ कर देंगे? No sir, sorry. We will make necessary treatment in the books of account. What will be the treatment? There are three alternative treatment. Number one, we can raise the goodwill in the books of the firm. So if we raise the goodwill, the journal entry will be goodwill is an asset, goodwill account debit, and the old partner's capital account will be credited with their old profit sharing ratio. And as a result of that, the goodwill will appear in the books of accounts after the admission of Mr. New partner, and the capital account will be enhanced and the ratio will be enhanced with the value of goodwill in the ratio. Now, if they do not like to show the goodwill account in the books of the firm, what do? They will raise the goodwill in the books and they write him off. For raising the same treatment and writing off, the goodwill account will be credited, and all the partners including the new partner, they will be debited with the new profit sharing ratio. As a result of this, if we adjust that, ultimately the capital of the sacrificing partner will be enhanced in the sacrificing ratio, and the total amount will be debited to the account of the new partner. So, and other than money, if we do not do that, we can pass a single journal entry, and that is capital transfer method. The capital of the new partner will be debited and the capital of the sacrificing partner will be credited in their sacrificing ratio. So that was the scenario in case of admission. Now today I am going to take up the issue of treatment of goodwill in case of retirement. What is retirement? Retirement is the exit of a partner from the partnership firm, and it results in dissolution of partnership. Partnership, as I have already told you, partnership क्या है? Partnership is the relation. Partnership is not the business. Partnership is the relation which subsists among the persons who have agreed to share the profit or loss of a business carried on by all or any of them acting for all. So partnership is the relation, but when this relationship is broken as a result of admission of a partner, as a result of death of a partner, as a result of retirement of a partner, as a result of change in profit sharing ratio. But in all the cases, partnership business will go on as usual. So business goes on as usual, but there results in internal changes as a result of admission, retirement, death, or change in profit sharing ratio. But the partnership firm, when the partnership business is closed, this is known as dissolution of partnership firm. In that case, there will be no business further. So it will be the absolute closure of the business house, and as an accountant, our role will be closing down the books of accounts. But this is external change. But in case of change in partnership as a result of admission, death, retirement, or change in profit sharing ratio, it amounts to change in partnership. So it is an internal change. Okay, these things have been spelled out. These things have been spelled out in many of my videos uploaded before. But right now today our topic is treatment of goodwill in case of retirement. Retirement is the exit of a partner. Now, when the partner leaves the organization, it is a case of retirement, and he will be paid off all his amounts with respect to the his share, with respect to the past profit, his share as to the results of valuation of assets and liability, and of course the amount of goodwill, what has been generated within the organization as a result of their total performance in the business house. And the amount is basically the amount which they have generated is basically known as goodwill. Goodwill is the asset those have been generated by the efforts of all the partners. And when the old partner, when anyone is going out, he will take the share of the asset what he has already generated. Okay, and that is basically known as goodwill. So take our problem, the value of goodwill of a part. Mr. A, B and C are working as a partner of a firm. They are the partners, Mr. A, B, Mr. C. Their profit sharing ratio is 4:3:1. Okay, sorry, 4:3:2. That is their old ratio. Now B is quitting. B is leaving the organization. Now their new ratio is 5:3. So the old ratio is 4:3:2 among A, B and C, and now new ratio between A and B, A and C 5:3. Now our value of goodwill is 72,000. In case of admission, we have seen that the new partner pays the required premium, but there is no question of paying of premium in that case. So what do we do? What should be the accounting treatment? Number one treatment is raising the goodwill in the books of the firm. Raising the goodwill. Okay, now what should be the journal entry? You have done it yesterday. Same thing, goodwill account should be debited. So goodwill account is debit to Mr. A, to Mr. B and to Mr. C. In which ratio? In their old ratio. What is the old ratio? 4:3:2. Okay, 9. So 9 means 8. So it is 32,000, 24,000 and 16,000. Okay. And now the value of goodwill is 72,000. So this is the first alternative. If we do not do anything, we will treat the goodwill in this way. Goodwill account is debited. Goodwill को हम लोग बढ़ा दिए हैं किताब में, तो goodwill is debited with 72,000 and ABC's capital are credited with the amount 32, 24 and 16. If the new balance sheet, when we will prepare the new balance sheet, in the new balance sheet goodwill will appear in the books. Okay, and the capital accounts Mr. A and C will be announced, while B's account, B is retiring, so B's account will be settled. Okay, he will be paid off. But yesterday I have told, in the last occasion I have told you, goodwill is a very very important asset. At the same time, goodwill is a vulnerable asset. आज गुडविल है, कल गुडविल नहीं भी रह सकते हैं. सोचो आज बहुत अच्छा ऑर्गेनाइजेशन चल रहा है, कल नहीं तो परसों नहीं तो सो और कोई अच्छा ऑर्गेनाइजेशन आ गया, इसको आपको सेल घट गया, तो इफ़ द सेल becomes is reducing, if sale is reducing, in that case your customer visits will be reducing and your profit will be reducing. So there is no question of having the goodwill. So goodwill is such an asset which we should enjoy, but we should not show. ये ऐसा एक एसेट है जिसको हम एंजॉय करेंगे अंदर से, लेकिन हम किसी को बोलेंगे नहीं, क्योंकि इसको फसल हम लेते रहेंगे. तो इसीलिए क्या करते हैं हम, ये गुडविल रेज हुआ, तो अनदर अल्टरनेटिव इज रेजिंग एंड राइटिंग ऑफ. रेजिंग एंड राइटिंग ऑफ. तो रेजिंग एंड राइटिंग ऑफ मीन्स, देखो सेम थिंग विल बी देयर. गुडविल account debit to ABC. Now it will be written up. In that way, A and C's capital account debit to goodwill. Okay. Now in which ratio? In the new ratio. In the new ratio. What is the new ratio? 5:3. So goodwill is 72,000, 45,000, and it is 27,000. So if we follow this method, raising and writing off, in that case goodwill will be raised in that way, and goodwill will again be written off with the help of Mr. debiting the remaining partner A and C. So these are the two alternatives. Okay. Yes, in the last occasion I have already shown you another method, that is capital transfer method. We will we like not to pass any account by which goodwill will be raised. We will not pass any account by which goodwill will be raised and again write up. We make a single transfer, single journal entry, and that method is basically known as the capital transfer method. In order to do that, we have to make an working. Okay, what we have done? First of all, we have raised the capital, raised the goodwill. Goodwill has been raised in the old ratio 3:2:1. So it is 32,000, 24,000, and 16,000. And then goodwill is written off between the remaining partner A and C in the ratio, in the new ratio 5:3. So it is 45,000 and 27,000. The remaining, so the difference is S capital is finally debited with 13,000. C's capital is finally debited at rupees 11,000, and B's capital is credited with rupees 24,000. So the journal entry will be A's capital account debit, C's capital account debit to B's capital account. So okay, so B, it is 24,000, it is 13,000, and it is 11,000. Okay. So that is capital transfer method, and basically this is the gaining part, and we can do it in the gaining ratio. This is the gaining ratio. What is the gaining ratio? We have already calculated 13:11. So in the gaining ratio. Okay. So if you do not find out the gaining ratio, you can do in this way. Or if you want to find out the gaining ratio, now how to find out the gaining ratio? The gaining ratio is new ratio minus old ratio. Gaining ratio is calculated in that way. That is the old ratio. The old share of A, new ratio minus old ratio. New share of A is how much? 5/8. Okay, and the old ratio is 4/9. And in case of C, the new ratio is 3/8, and the old ratio is, old share is 2/9. So you differentiate, it is 13/72, and in case of C it is 11/72. So gaining share is 13/72 of A, and of B it is 11/72. So the gaining ratio is 13:1. Okay, 11. So that is the total treatment of goodwill in case of retirement of a partner. Okay. So thank you, friends. So please go through the topic, go through the chapter beautifully. If you have any queries, put your comment. Okay, put your comment. Go through minutely, please. And any trouble, any query, please be intimated through your comment. Okay. Thank you very much. Stay tuned with us. Thank you. Thanks a lot.